Alrighty, guys, we got a lot to talk about in this video. We have a lot to get through, so let's just dive into it. We got to break down a CNBC CFO Council survey that just came out, which interviewed, well, I guess not interviewed, but it surveyed 22 CFOs, C-suite CFOs at top corporations and organizations, and we got to get into some of these thoughts, beliefs, the numbers, because a lot of these, well, in fact, all of these CFOs believe we will not escape recession. This is crazy stuff. So sit back, relax, take a sip of your coffee, and let's get into it. And oh, by the way, today's the last day to get your 6 free stocks from Webull with any deposit. Get those 6 free stocks, link down below. And with that being said, let's talk. So when these CFOs were asked why businesses are struggling right now, well, they answered, over 40% of the CFOs answered that inflation is the number one external risk to their business. Who would have thought, right? Inflation is the number one risk to their business, and almost a quarter of the CFOs cited, about 23% of them, cited the Federal Reserve policy as the biggest risk factor. Okay, that's reasonable. That makes a lot of sense. But the next one here, another 14% of CFOs cited the Russia-Ukraine war as the number one business risk. Now, this one is, in my opinion, I'm going to be honest, I'm not saying Russia, Ukraine, the conflict isn't real over there. It's 100% real, and there are companies that are struggling from this, but I feel like this is a scapegoat for a lot of companies. I'm not singling out any company, but 14% of the CFOs cited that as a risk, and I've seen a lot of businesses out there, reading articles, earnings, all that good stuff, that have been doing the same. I think a lot of businesses are using it as a scapegoat. That's just my thought. I'm just being honest here, guys, and let me know your thoughts, as always, down below in the comments. The real risk at this point is inflation, is the Fed policy, and businesses don't really want to admit that. Some are saying that, but a lot of people are just going with the Russia-Ukraine scapegoat. That's just my opinion, right? And when they were asked, these CFOs, if they have faith in the central bank and actually being able to fight inflation, which at this point, and mind you, tomorrow morning we get the May CPI data. That's going to be interesting. When these CFOs were asked, 54%, a little over half, expressed confidence in the central bank being able to control inflation. That is, I guess not a very high amount, but it's not a very low amount either. It's about 50-50. And right now, what is the Fed funds rate? 1% or something like that. And we have inflation at 8.5%, 8%. We'll see what the annualized number is based on tomorrow's data. So they're falling behind. And they got to catch up. They got to raise these rates. And in my opinion, do I have faith in the central bank? I think they will be able to put some sort of fight up, but we have to see if these supply chain problems clear up, which then might cause the inflation to drop. And let's say we have the Fed funds rate at maybe 3%, which is what they want to get it at, 2.75, 3.25, and maybe let's say inflation's at 5%, 4%, maybe we could fight it at that point. But the way things are now, do I have faith? 1% interest rate, 8% inflation? No, I don't see inflation slowing down based on what things are looking like right now. And when they were asked about a recession, guys, get ready for this. The majority, 77% of the CFOs responding to the survey said a recession will occur during the first half of 2023, which is pretty dang near where we are now, guys. It's within the next year. And I think we could be potentially in a recession right now, and we might still be in a recession in a year from now. Who knows when we're gonna tunnel out of this and get back to a strong, solid economy. Let's be honest. Who knows what that roadmap looks like at this point? We kind of have to see how it goes down. We have to be prepared for anything, right? And no CFO, get this, guys, no CFO forecast a recession any later than the second half of next year. So they're saying, hey, it's coming now. It's coming now. The recession is coming now, or within the next couple of quarters. And no CFO thinks the economy will avoid a recession. This is crazy. So all of them, 22 CFOs surveyed by CNBC, they think we're all going to be in a recession, which I agree with. I tend to agree with, and I said this weeks ago, guys, a month, 2, 3 months ago. I've been saying I feel like we're getting in a recession. It's on the horizon, and it's not like I'm Nostradamus and nobody predicted this. It's kind of a very obvious, a lot of people predicted this. I mean, it's not that crazy, right? And the CFOs has some thoughts on the stock market as well. But before we talk about their thoughts there, make sure to get your free money from Moomoo. You like how I did that, guys? Make sure you get your 5 free stocks from Moomoo, each up to $2,500 with a $100 deposit, link down below. Or you guys can simply go to stocksurfs.com/Moomoo. Don't forget to also get your 6 free stocks from Webull with any amount deposited. That ends today, by the way, so get your 6 free stocks from Webull, and you could also get $40 off of your premium membership with Seeking Alpha. All of that is linked down below, and if you guys use any of those links, just know it helps me out a lot. It helps out the channel, and I appreciate you guys as always. And with that being said, let's dive back into the video. So the majority of the CEOs, or rather the CFOs, the Chief Financial Officer, let's not mix those up, guys. Big difference. The majority, 77%, expect the Dow Jones Industrial Average to fall below 30,000 before ever setting a new high. And if I pull up the Dow Jones chart very quickly, let me show you guys what's going on. If I pull it up, and I don't really analyze the Dow too much on my channel. I focus mostly on the S&P 500 and the NASDAQ 100, SPY, and Triple Q. That's what I look at. But overall, the Dow is it's down a lot. I mean, not a lot compared to the Russell and the NASDAQ, but it's down over 10%. It's in correction territory, down about 12%. Well, I guess that's really not a lot, to be honest, guys, because we could go a lot lower. A bear market is a 20% drop from all-time highs. So a lot of these CFOs think we're going under 30,000, and why did they pick that number? Well, look at the low, guys. 30,600 was the low from about 3 weeks ago on the Dow, and if we take that low out, we go under 30,000, and that, that could be a point where the Dow really starts getting into a bear market, because like I said, right now it's in correction territory, but if it gets under, let's say, 30,000, it starts going to 28, 27,000. Where would that be at that point? Would that be bear market? Where would this be in a bear market at? Or rather, what level does it have to be to officially be in a bear market? Probably like 28.7. No, maybe 29.5. Yeah, pretty much 29.5, guys. So that's what their prediction is. They think that the Dow's going to get into a bear market before it ends up going back to fresh highs, which, hey, I tend to agree with as well. That makes sense. At the end of the day, these markets have not gotten hit very badly like we've seen in the past. Sure, the NASDAQ, the Russell, they did go down over 30% from the peaks, but they didn't get hit 50%, right? And the S&P only went down 20, 21%. The Dow didn't even get into a bear market. So as the recession literally comes in the next couple of weeks, when we get the GDP number, and within the next quarter or 2 quarters, whatever, and as it gets worse, if it gets very bad, the Dow could easily go down 20%. So that is what they are thinking. And in terms of moving forward, right, so we're not all doomsday here, and I'm not trying to be doomsday. I'm just literally breaking down this survey, right, guys? Moving forward, twice as many CFOs, 36%, say they will increase their spending over the next year than decrease, which is about 18%. So there are 18% that are about to decrease spending, but 36%, again, they're looking to expand here as the markets, the economy is starting to struggle, right? They're trying to push through while other people are kind of going in their shells, right? Other companies are going in their shells, while almost half, 46%, say they will at least maintain their current spending levels, which I guess that is a good sign. And firms are still in hiring mode, with more than 54% saying headcount will be increasing over the next 12 months. Only 18% anticipate a decrease in staff. So I guess that's pretty good. A lot of these CFOs, they see their companies expanding over the next couple of, the next year. And sure, we have some that are decreasing, looking to contract a little bit. And who knows, maybe they end up going out of business. That's possible. But, a lot of these are looking to continue to increase. But we have headwinds, guys. We have headwinds, no doubt about it. And these CFOs, these companies, they're going to be, they're going to be in for it for these next, couple of months, next 6, 12, 18 months. For sure. And when it comes to the overall markets today, guys, same old crap. SPY still trading in this downwards channel on this 1 hour chart. Same with Triple Q. We're down a little bit today on the day. The Russell's down 0.9%, Nasdaq's down 0.4%, S&P's down 0.6%, Dow's down 0.6%. We are selling off all across the board, but it's not a crazy red day. It's kind of just a little pullback day. Let's put it that way. And again, we're still within this channel on the 20-day chart, Triple Q and SPY. And really, a lot of stocks, most of my stocks here on my watch list are, most of these stocks are red. Chinese stocks are getting hit again, which I'm not surprised because they ran up a ton, so they're selling off. We're getting some profit taking in Chinese stocks. Tesla's up. That's great, 3.6% for Tesla. Starbucks up about 2%. CRM 1.5%. Adobe's up 0.6%. But other than those 5-6 stocks, we're in the red for the most part today, guys, and we will break down the markets more in my next video, so make sure you all subscribe, hit that like button, and let me know your thoughts in the comments. As always, I'd love to talk to you all, get to know your perspective, and we could chat in the comment section down below. Feel free to join my Patreon if you guys want all my real-time buys, sells, call-outs, morning videos. All that is on Patreon, link down below. You could also get your 5 stocks from Moomoo and your 6 stocks from Webull and $40 off Seeking Alpha Premium. All of that, again, is linked down below. And with that being said, cheers. I'll catch you all in the next video. Thanks for watching. As always, guys, your support is very appreciated here. I'll see you later. Peace out.